Welcome back, everyone, to the European VC podcast. Today, I have another episode with you where we're diving deep on the CVC world. We have with us a very good friend of the podcast, of course, Jeppe, who is our in-house CVC expert. But then for this episode, we're talking to Petr Mikovec, who is coming from the Czech Republic and InvenCapital, which is the investment arm or the subsidiary, as he calls it, the daughter company of CEZ Group, which is a very large energy conglomerate in the Czech Republic. They have a very special structure. They're different from a normal CVC in that they have with them EIB as one of their LPs in each of their structures. We're diving into a conversation here where we're talking a lot about how they're thinking about their value add as a corporate investor, how they think about partnering with the rest of the venture and tech ecosystem. And we're talking about Sun and their portfolio company, which was acquired by Shell Global, of course, the big, large conglomerate or corporation in oil and gas that we all know, which, of course, is also a competitor to CEZ. So a good example here how they, as an individual investor, can really deviate from just serving Inven only, but being a real good financial investor that helps optimize for everyone around the table and the cap table. So hope you enjoyed this episode as much as I did making it.
This was their finest hour.
Tear down this wall.
It's more than just an alliance. This is a union of values.
Let's start acting.
This show is not investment advice, and the hosts of this episode may be invested in the funds and companies featured.
Petr and Jeppe, welcome to the European VC podcast.
Hello.
So, Petr, let me introduce you just by reading a bit at your bio, and you can then add the context and correct whatever things I got wrong. Are you all right with that?
Go ahead.
So, Petr Mikovec, you're the managing director and chairman of the board of InvenCapital. You are a CVC, which is also why we have Jeppe with us here, of course. And you have a bit of a special structure, which we'll dive into today, because you have 500 million euros under management, where some of that money comes from the CEZ Group and some of it comes from the EIB. And I won't mention the numbers here because I'll let you say those and then we can talk about that. You're headquartered in Prague. You're Series A focused, and you're investing primarily in Europe and Israel, focusing on climate tech. You have some notable investments behind you, and some of them are Sonnen, Taro, Home Tree, and Drives. Do I pronounce that correctly? That's the first question to you.
Yeah, Drives, exactly.
Beautiful. Did I get it somewhat correct?
You got it correct. I think, but there's more to it. Let's discuss. This was just characteristics of our fund, but it will be more exciting going forward, I hope.
And maybe you could, because I alluded to it there, you have a structure where you have money from CEZ Group, and then you have money from the EIB. And this is not the typical structure that you see when we're talking to CVCs, because normally the sole LP, or most often there's a sole LP, which is the corporate. Could you talk a bit about that maybe?
Sure. So actually we are a daughter company of CEZ. And so that's why it's very similar to any other corporate venture. But we are set up as a SICAV fund of qualified investors. So below the daughter company called InvenCapital, there are sub-funds. And one of the sub-funds is open for CEZ Capital, money from CEZ. Another sub-fund is open for other institutional investors' money. And that's what we did with European Investment Bank. So there's CEZ, there is Inven, and below sub-funds. And we have a co-investment agreement between these sub-funds. So every euro we invest from one, it's co-invested with from the other one. And we have invited the European Investment Bank to be the next investor to CEZ, and that's how we are set up.
Yeah, how did you manage that?
Where can I start? So at the beginning, we knew we need to build a corporate venture which will gain trust from the market out there, from the founders of the startups in climate tech and other VCs, right? And sometimes I have to say that corporate ventures have a little bit like difficult starting point, from this perspective, because there's always some big strategy. There's always question mark. Who is taking a decision and how fast can they deploy money? Is it actually really venture, or is it like some type of still M&A initiative, which start with investment, etc.? So we were thinking, how can we send a clear message to the outside world that this is actually really business, financial driven, within some strategic framework oriented fund. So we were thinking how to do that, and this idea came to our mind. Why don't we build a structure using SICAF structure, which is nothing really new out there, which can actually create such a fund which can bring in new investors and show that this is really real business.
And why did you go for the EIB rather than someone else? The reflections behind.
EIB is a partner of CEZ Group, so there is a relationship. They are big. They are actually providing a lot of venture debt, lots of investments in Europe. Obviously, they are European too, so there were a lot of topics which aligned us, and so it was very, very, very natural choice to talk to them and try to do that.
What complexities has it brought? And Jeppe, please also, join in here on the questions that you think are most important to draw out for corporates that might be thinking about building programs. But I'm curious, so we have the clear value proposition or signal to the founders that this is a fund that's in the game just as any other VC. So you're very much, showcasing a specific side of you there. But I'd be curious to understand from the mother company, what were the pros and the cons that you were weighing when you were doing this?
Look, actually, our mother really liked this. So if I step back a little bit, obviously, in our case, our mother is the most conservative corporation in Central Europe. CEZ is operating nuclear power plants, right? So risk is something which you want to mitigate there, right? And that's good thing to do in their case, right? For all of us. Now, if you want to enter the venture, business, it's different. You embrace risk, actually. So the biggest challenge was actually, how can such mother deliver a baby, which is actually totally different culture-wise, and still combine the best from both worlds and create something which really creates value to many out there, right? So because of the mother being so conservative, they actually are very happy to have. So we've brought in someone else into the game, which brought as a prestige to this fund, and the board of CEZ, who took a decision at the beginning that they want to have venture arm, which is lots of risk, right? That there is this validation point that their decision was good if someone else joins the table. So from this perspective, it was only positive, and our mother really liked it too.
I think it's super interesting, Peter, right? Because and I don't know, European culture is so different amongst the countries, but a lot that I see here in the Nordic is that the corporates, they kind of want their entities for themselves, right? They're super focused on, this is us, this is competition. So maybe one question for you. In the CEZ Group, were there a specific person in there that promoted the corporate venturing side, or how did it come about, the whole thought about, creating a corporate venturing unit?
Very good question, because that's so important. Because if you think about it, the one thing you want to really avoid when you set up such a corporate venture arm is not to be eaten by your beloved mother for breakfast next morning you set it up. Yeah, there could be this moment, let's go adventure, right? Why not? Others are doing it too, but it won't survive, or it won't deliver on the goals, right? So it was very important. So if I step back to 2012, when actually the strategy of CEZ was updated, we have been putting together, and I've been there actually, which is important maybe a thing too to say. I've been with CEZ before InvenCapital for 10 years even. I was running corporate development and strategy too, and we were building this 3 horizon strategy within CEZ Group, right? With CEZ Group, which is horizon number 1, you operate your existing assets as much as you can to maximize the value, maximize the cash. Second horizon, build maybe some other businesses which might diversify you a little bit from your core business you have. And on the third horizon, you build real options. Something you don't know how big it can get, how important it can get, but it's worth being there and open up for upside. And that's where we put Inven actually. So Inven was part of the overall 3 horizon strategy, trying to kind of answer big questions for CEZ Group by being very active on the ground, on the market, which was all about how is the electromobility going to evolve, right? Going forward, how is the decentralized generation, PV panels, batteries, etc., going to evolve? How the hydrogen industry going to evolve? All these big questions. How the CO2 will be impacting business models, etc., etc. So of corporations. So all these big questions. So there was a big consensus actually at the end of the day by the whole board, obviously. Which enabled such deal to happen. But again, we needed to have very, very intimate debate, the future daughter being Inven and the mother, about really how we're going to play it forward, right? So we don't get eaten, as I said. So there were 3 deals to summarize. I'm making it a little bit simplistic. But deal number 1 was that the daughter said to the mother, to the board of CEZ, hey, we will cannibalize you. We'll be doing things you don't like. Get over it, because it will happen anyway with someone else, right? So you can either, try to avoid what's going on out there when it comes to disruption, or be part of this journey. It will happen anyway. Deal number 1. Deal number 2, we need to take a decision here, because we have different cultures, right? You have to be conservative, but we need to embrace risk. So how can the conservative culture take decisions involving lots of risk, right? So it's okay. And the third deal was we need to have a motivation package, because it's all about a team, professionals and masters, right? Who we need to hire, and carried interest became a part of the package. So all in all, we are combining the best from both worlds, and the board of CEZ was involved, and the middle management of CEZ was involved too. It was a baby of all the people, including the people from HR who were helping us to draft the compensation package, which is different from the traditional compensation packages of the traditional utility. So all have been involved. It took a year, and here we are. We really delivered the baby, which finds the right distance from the mother, combining the best from both worlds.
That's impressive. Peter, could you talk a little bit about the governance structure? So the decision-making process, is that all with Inven, or do you have something that refers up to the mother?
When it comes to decision-making, it's us. It's the board of Inven taking decisions. And when we take these decisions, we have 2 members of the supervisory board of Inven from CEZ who are there with us. They cannot block, they don't have any veto. And that's okay, because we have decided to do it this way from day one. There's an interesting debate happening there, but eventually it's the board of Inven taking decisions. And again, it was pre-agreed because there's a risk attached to it. So why don't we stay a little bit like aside? And try to do our best. Yeah, but it goes like any other. So we as a team of professionals, we have actually consensus-driven model here. So we go out there, and that's where already it starts, the selection process, right? You pitch yourself in a maybe different way. Try to express your values. You are bringing an opportunity to the Inven team. You write 1-pager, you gain the interest of the investment professionals here. Then you go, if they said yes, you go, you meet them personally. You go on the site of the startup, and you do one-to-one interviews and all the work. Then you write a deal alert, and you go to the investment committee, which is the board of Inven, with 2 members from CEZ. who are sitting there listening to our dialogue, and we take final decision. And then once we sign the term sheet, in 6 to 8 weeks, we wire the money, and we have never changed our mind.
That's really nice to hear. Maybe one thing, and please do say no if that is going into too much detail, right? So the structure of InvenCapital, does that also have a co-investment vehicle? Does the team also, you and your colleagues, do you also invest?
So that's one thing we're not able to negotiate. We wanted to, but that was not possible. So because from the perspective of CEZ Group, we are the daughter company. And so from the perspective, they own us 100% as a fund of qualified investors. So we don't have this type of motivation here, but we do have carried interest, and we have a big interest, again, aligned with the outside world, that we want to maximize the shareholder value of the startup we invest in.
I think it's a super strong model, right? Also, as you have to present to the outside world, right? How you behave in the ecosystem, right? And I think maybe that could lead into a little bit of a dialogue around, you know, what is the philosophy and what is the strategy, right?
We have this kind of free hands, right? As I explained. However, it has to be happening in the region, which is of interest of CEZ Group and European Investment Bank. It's Europe, but not only Europe, as you heard, it could be UK and Israel too. And the topic has to be climate-related topic. At the beginning, the first 250 million out of 500 were more devoted towards the smart energy, the climate technologies related to energy business, right? So you see in our portfolio firms like Tado, which is a smart thermostat, but now combined with the tariffs, time of use tariffs, able to manage your heat pump, solar panel, and charge your electric vehicle. It was Zonen, and where we experienced the largest climate tech exit in 2019 to Royal Dutch Shell at that time. And you know Zonen, so battery combined with PV panel. The story was about actually connecting all those batteries, providing ancillary services. So again, very energy driven topics, right? Drives, Israeli-based company, a software company which is able to manage any type of charging infrastructure out there. So very related to energy, electricity, etc. Now, with the second 250 million, same concept, same combination of EIB money and CEZ money, we have broadened our scope to decarbonization. So whenever we can support a startup out there which is helping to decarbonize our world, this topic will be taken as a serious topic to invest in. And you may have seen in our portfolio, for instance, Taranis, which is actually agriculture tech company, flying drones over fields, helping farmers to increase the yields while keeping CO2 on the ground, and et cetera, AI-driven type of business. So we are looking at the recycling too, right? And all these type of opportunities. So we are broadening our scope, and this has to be actually happening in Europe for EU countries for when we invest with EIB, and it can be Israel, UK, but topic is decarbonization/climate tech.
You have a sentence in the script that we shared beforehand, where you said, "Embrace the art of conducting VC business through systemic coaching while perfecting the know-how of doing it." I'd love to unpack that sentence. So first, many of our core audiences will say, systemic coaching. There's something that Andreas is interested in there, because we're doing a lot of deep work retreats where we're bringing founders and VCs, into the mountains and work with.
I want to join this. I want to join this.
Yeah, it's incredible work. Yeah. But I'd love to ask you then, how do you see this? How do you do it? Is it the approach of bringing coaches in, or do you do it yourself? Or
yeah, sure. So at the beginning of this journey, dream job again, meeting so many beautiful people, I know the story, around the world, who wants to do something really meaningful and supporting them. Look, someone told me it's a people's business, Peter. It's a people's business. And I said, yes, of course. Yeah. I didn't know how much people's business this actually is. So when you think about it, we are investing in the babies of the founders, the startups they've created it with big purpose, right? Is baby, and they have a relationship with it. So, you may better approach your investment conversations with them with the empathy, having this in mind too, because you rely on them anyway, right? And you need to maybe add value rather than distress them somehow. So, but it's not only about the founders, but about their boardrooms too. There are people sitting at the board too, and they have their investment committees too. And they have different cultures in these funds too, and they are there to support the founder's dream, right? Now, so you better understand the context of those guys too. And by the way, when we invest, we try to pick people we can really live with through difficult moments when it comes to co-investors. It's not only about the founders, and by the way, founders are picking us too. It's a two-way street. And I always advise them, pick those guys you really trust and they can add value, not just money, etc. Now, the systemic coaching comes in that if you really want to identify these founders, these opportunities, when you invest in these people, you better understand yourself in the first place. Who are you? Where are you coming from? What are the hidden loyalties and patterns driving your decisions? Why you feel stressed in this or that situation, or it's too much, and happy in this and that? Because it's all part of the whole story. So what we practically do, we have been firstly investing in ourselves with an Invent team, and investing in systemic coaches, using systemic coaches to really get through one-to-one and team coaching sessions to really connect with ourselves, so we can then approach with empathy the outside world. And that's what we do. And we are offering our coaches to our founders too, because guess what's happening? Sometimes it's a very delicate moment. When we invest, it's A or B round. It's typically a moment where the founder CEO is experiencing a situation where he or she needs to decide whether he or she is right for the next phase of the company, actually. Because we are not talking 20 people anymore. We are talking hundreds of people. We are not talking 5 million revenues in euro. We are talking 100 plus revenues, what we need to get to. And we're not talking, home market where you test your product and build your product market fit and your business model. We are talking, we go regionally, we go European-wise, you go globally, right? And that's maybe too much. And that's the moment, ideally, the founder, need to let go his baby. And, those who have babies, I got 17-year-old boy, and 15-year-old girl. And it's, it's tough to let them go. And I know it's so important for them. So I step aside and I go because I'm much better for them. I'm there for them. So that's a similar concept. People's business. There are people running the show, founders, investors, employees, all that stuff. We better be connected on the people's level so we can figure out the right solutions for very difficult moments they're going to be facing and they are facing out there.
We co-invested together in Forto at my time in Maersk, right? And that's how we know each other. So I'm happy that I'm still sitting here with you today, right? When I invested for Maersk, I focused a lot on the HR due diligence side of things, right? Do you incorporate these things when you do your investment proposal? Does it have a specific section? Or how do you go about it when you take your investment decisions?
Yes, so we do run specific character research, so to say, with the goal to add of the teams, to add value actually to those guys. It always ends up positively. It always ends up with the understanding who is good for what within the founders team. And that's one way we add value. So this is part of our investment decision process. But at the same time, we are trained in coaching, but we are not coaches. Some of them actually already have even a license. But we are spending, coming back to the art of conducting venture business, right? We are spending, I would say 65, 70% of time is the soft area. And the remaining is the data, right? Which we do too. And we have a lot of documents, a lot of research done. But at the end of the day, to take decision, there's even this question, how you feel about this. So we do that. It's a very important part of our the due diligence, and we have a very deep discussions about this within our team of professionals. And again, we are trained to have these type of discussions too, because we have tested it on ourselves, and we are in the process of personal development too. Anyway,
How do you mentioned the boards there, and I'd love to ask you how you think about the way VCs show up on boards. Where do you see that we can improve? Because, and I asked this question because the one other person that I know that is very much into systemic coaching and at the same time operating at a very high level as a VC is Fred Destin, and what he speaks about, very often is the board dynamics and how we show up as investors there or fiduciary shareholders there. What do you see out there? Where do you see that we can improve? If you say the fatal mistakes you're seeing being done, or the core challenges you're working on in the boards that you're on.
Yeah. Got you. So the key word is alignment, building alignment. There's so many times misalignment, which is kind of logic too. And to build alignment and trust within the board is all about transparency. So one of the things I ask every board member I'm with is, when we have this moment, to actually talk about their motivation when it comes to and the restrictions they have as a fund. Some funds needs to end at some moment. Some funds needs to, they ask for by the LPs to bring some cash home, right? Because they are raising funds, all that stuff. So first point is not to blame anybody, but to have very honest discussion, who is where, who is patient, who is not, and kind of why. So that's the first point. And then once we understand this, we can accommodate people, right? There are secondaries. We can do a lot of things in the next rounds, but it's good to know who is ready to support the company and under what conditions in the next phase, and who's actually can't do that because of very strict IC or very complicated situation at their fund. And this is actually a very important thing. The second thing we do when it comes to business is part of our know-how, and we actually like everybody to follow this if they think it's a good idea. When we do due diligence, we actually run a strategic workshop with the existing investors, board members, the new ones we bring in as a lead, if you are lead, the management and the founders. So we are looking at the company from the new perspective. There's always love all around because there's new money coming in soon, right? And it's a moment where you can really take the company to the next level. And that's the moment you can actually really try to align what's best for the company. And that's the second thing. The alignment always has to be about what's best for the company, because it's always then linked to the shareholder value of all, right? So really investing throughout the due diligence, not on how can I mitigate risks and make my whatever risk department happy. It's all about how can I create value already with asking the right questions, maybe not having all the answers, right? And aligning everybody so we don't go 3 steps forward and 2 steps back, so we can really 5 steps forward to the next level. And that's kind of the goal of the workshop. And we are getting very positive reactions and positive things when we do that. We did it with Forto too, actually, when we were investing. I even brought some of our advisors because it was very, very technical area, right, for freight forwarding, and even McKinsey was involved there, and to help us to even provide some data points. Because so that's kind of Andreas. That's what we do. We try to create value, and that's why our mantra is we help startups. I think all of us VCs should have mantra, we empower or help startups. And every day we can ask ourselves a question at the end of the day when we go home to play with our kids. Hey, how have we helped actually? What is the value we have created? Yeah, alignment, trust, and the strategic workshops to get all these alignment around the business might be actually very helpful. And there are other things, sometimes, it's always so good to shut up and let don't talk too much at the board, and Some people,
I
it's
saw I
a
saw
lot
you
of
in
people there.
action in photo, right? So and that was very impressive. You were an extremely good board member, and I can also see the relationship you have built, right? So I can see that you have continued to co-invest with the Heilemann brothers that is now running INO, right? So I
Yeah.
can also see you're building your relationship out into the ecosystem.
Yeah.
Maybe you could talk a little bit about, how do you integrate yourself into the ecosystem, and what do you do to be seen as
Yeah.
a valuable co-investor?
Yes. So I will tell you something about how we work with Enu too, and very practically. But coming back, how we maybe differentiate a little bit. First of all, we want to help the whole industry, and sharing whatever we see and hear and what we think is important. We try to do. At the same time, we want to lead by example too, and maybe that's the way we differentiate a little bit. So when we pitch at Eco Summit, and maybe you saw us there too, we bring the whole Invent team on the stage, not just one guy pitching there, right? So we are embracing the spirit of team, and we build pyramids with our bodies to tell the story that there has to be fundamentally right assumption behind your business. There has to be a big dream and vision and trust. Our pyramid was pretty big, and if we wouldn't trust each other, because we would fall, this would fall apart. So we are telling stories through these type of the different type of pitching, right? So and take a risk, which is very, very important. We ask everybody to pitch us your company, pitch us your dream, right? Pitch us your story. So we wanted to, as well take a risk and pitch our stories through these. We did Haka dance. It's on a video somewhere. You might like it. It's amazing. I always surprised what we did, and we were celebrating Sonnendeal, and we were so happy that Christoph Ostermann and Thorsten, were able to sell this company and build this company, and we were part of the story. So we are celebrating through this and too. So this is how what we are hope bringing to the society, sharing, even the research we do, and then maybe pitching the way. So we really take a risk, and practically risk of losing the face, right? Because it's really, I have investment bankers in the team and consultants, and they build pyramid and do Haka on the stage. Come on. It's good for us too, by the way. Put ego aside. It's so much fun. Now, Enu, I think is a great example. Look, we are building, hopefully, this relationship with many, many other VCs out there. What we are bringing to the market is a notion of building constellation for success. I think we're all going to agree that timing is a challenging thing, and we cannot predict timing. And everybody says that's the reason why startups fail or are successful, etc. And that's true. However, we didn't want to play this roulette with the time. So we said, what can we do differently so we can increase chances that if I'm wrong in timing, too early or too late, I can still survive and help the company to be successful. So building the strong co-investors group is very important. That's the constellation where we really come in together and co-invest with someone where we have really relationships and we really know how they're going to be behaving in the difficult moments. And in one example, we led the deal transaction in Ember, Scottish-based electric bus company. We made the round a little bit bigger, even though we could have done it by ourselves, to bring in other people. Enu and the 2150 built stronger team. I just came from this board today. It was amazing board, contributing all the experiences to the founders, great founders, Keith and Pierce. Look, and what we have done so we can actually accommodate others. We made our tickets smaller, actually. So we don't insist how big we are in the company. We want to have an impact, and we believe with broader groups, smarter groups, aligned groups of investors, we can help with the difficult when the difficult moments comes, and even be much faster in growing when good times comes.
Peter, on this note of collaboration, I got to ask you something. And I confess, I went to ChatGPT to ask a question here, because I said, isn't Shell a competitor to CEZ Group? And I, of course, asked that question because one of your portfolio companies notably exited to Shell. I love to ask you, the clear answer from from ChatGPT to kill the suspense is yes, Shell is a competitor to CEZ Group through their business models and their focus areas significantly, and then this is how they compare, and then it says core business, you're definitely a competitor in oil and gas production, refining, distribution, and renewable energy, and then it goes on to continue to say how you're competitive. So I'd love to ask you, how do you inside the team think about this, and how does the mothership think about investing in startups that end up being acquired by a competitor?
Yeah, sure. There's a great evidence how what freedom we have, right? So we can, again, if I want to be part of the winners, right? The clean exit is a must, right? So there's no specific rights CEZ can exercise. Now, CEZ can, if they want, they can win the tender, right? They can provide the best bid. And the fact that we are in for years as Inven, and they know us, right? So they can actually maybe come earlier into such deals, right? If they want to. Now, when it comes to Sonnen, actually, they tried. There was an attempt, but Shell was bigger. But there was, again, good reason. Sonnen was just too big, They were growing in the United States, growing in Australia, in UK. And for CEZ, if it was Germany and Europe at that time, it would be perfect fit. Now, they weren't too big. CEZ couldn't pay for markets where they are not interested. They have no interest in. So but they can do. They can strike contracts with those guys, etc. By the way, they use drives as software, etc. So it's up to them. How the mother takes decision. We are doing constant due diligence on those things out there, right? So it's giving them more comfort to go maybe earlier into the M&A type of things. But again, that's the proof that we are independent, but still combining the best from both worlds.
If I can throw in a data point here, Andreas, right? It's actually, there is a study showing that 42% of corporate that invest, they like to co-invest with peers, right? So they seem to get more comfortable when they have some of their competitors on the cap table. It's actually interesting.
That is one interesting data point. I want to close us off here because we're a bit late to the start, given some technological issues here. It is a VC podcast, so of course we got to struggle with the basic tech. Peter, thank you so much for joining us. It was incredible to get a look inside Inven and of course also the CEZ Group.
Thank you very much for having me. And Andreas, I would love to join your event in the mountains.
You already have an invitation in your inbox.
Thank you, guys. Jeppe, all the best. Talk to you soon. Bye-bye.
This was their finest hour.
Tear down this wall. It's more than just an alliance. This is a union of values.
Let's start acting.